Hey guys, welcome back to the channel. If you're new here, my name is Joshua Meislich and I'm a real estate agent here in Arizona, helping buyers just like you navigate the home buying process with confidence and clarity. So today we're going to be breaking down one of the most popular home loan options there is, the FHA loan. So whether you're a first-time home buyer or just looking for a more flexible loan option, this video is going to give you everything you need to know. So let's jump in. So first off, what is an FHA loan? So FHA stands for Federal Housing Administration. So an FHA loan is a government-backed mortgage that's designed to help people with lower credit scores, limited savings, or first-time buyers get into a home. So because it's insured by the government, lenders are more willing to work with people who want to borrow who may not be able to qualify for that conventional loan. So here's why FHA loans are so popular. So first, you're going to have the low down payment. You can put down as little as 3.5% of the home's purchase price if your credit score is at least 580 or higher. So they also have more lenient credit requirements. So while conventional loans typically require a little bit higher credit score, FHA loans can go as low as 500. Just make sure you do know if your credit score range is between the 500 and 580, you'll need at least 10% down for your down payment. FHA loans are also assumable. So that is a big win in today's market. As a buyer, you may be able to take over or assume that seller's existing FHA loan, including their lower interest rates from a few years ago. FHA loans also allow gifts. So your down payment, your closing costs, can come from family, friends, or a down payment assistance program. Another big perk is the flexible debt-to-income ratios. So FHA allows for a higher debt-to-income, higher than most conventional loans, which helps you if you have other monthly debts like student loans or car payment. And of course, there's pros and cons to everything, so there are some things to be aware of. One of the things to be aware of is the mortgage insurance. FHA loan requires mortgage insurance both upfront and monthly. Unlike a conventional loan, this doesn't just go away when you build up equity unless you take that, refinance that into a different loan. There's also property standards. FHA loans have stricter appraisals and property condition requirements. The home has to be safe, livable, and meet certain minimum standards. There's also loan limits. So FHA loans have caps on how much you can borrow depending on your county. So in most areas, it's typically lower than the conventional limits. So who does the FHA loan benefit? It benefits first-time home buyers with limited savings, buyers with lower credit scores, those recovering from financial hardships like a bankruptcy or foreclosure, anyone who wants more flexibility and is okay with paying that mortgage insurance in exchange for an easier approval process. And if you're planning to stay in the house long-term, or if you plan to refinance in a few years, the mortgage insurance becomes less of a concern. But here's a pro tip. So FHA loans do come with the mortgage insurance, but here's the good news. Once you've built up at least 20% of the equity in your home, you can refinance that into a conventional loan to get rid of that monthly mortgage insurance and potentially lock in a better interest rate. So this could be a smart move down the line to lower your monthly payment and save money in long term. So remember, your first loan doesn't have to be your forever loan. It's about getting you in that right house that works for you. And if you're thinking about buying a home and wondering whether an FHA loan is right for you, feel free to reach out to me. I'd be happy to walk you through the process, connect you with a great lender, and help you find a home that fits your needs and budget. So don't forget, like this video, subscribe for more real estate tips, and drop a comment below with any questions. So thanks for watching, and I'll see you in the next one.